Welcome back to Business Daily. Unfortunately, we'll not be having our guest join us this morning. There's been some issue with the network. Actually, I'm sure if you're well aware with the situation, the network situation has been quite terrible in the last few days. So we've not been able to reach him either virtually or via phone call, and we'll have to do all we can do. So just to give you a brief understanding on the conversations that we would have had this morning about the power sector. Now, the Nigerian power sector continues to grapple with the grid instability. That's something that you know already. You're seeing it happen to you, and its recurring system collapses disrupt electricity supply nationwide. Each collapse not only plunges homes and businesses into darkness, but also raises deeper questions about generation adequacy, transmission capacity, and system management. Now, compounding the problem is the metering issue. It's actually a very long-standing deficit. Millions of consumers remain unmetered, relying on estimated billing, a system that fuels distrust, revenue leakage, and resistance to tariff reforms. Now, without widespread metering, it becomes difficult to improve collections, attract investments, and assure fairness in pricing. Together, grid failures and poor metering underscore a sector stuck in a cycle where inefficiency discourages investment and underinvestment worsens inefficiency. So you see, it goes hand in hand. Inefficiency doesn't allow investment to take place, and then underinvestment doesn't allow efficiency to take place. So there's a cycle over there in the power sector that needs to be addressed. Now let's go to the Forex gains that we've been seeing recently. Now, against those backdrop, now authorities, of course, of the gains are reporting improved foreign exchange inflows driven by a combination of higher oil receipts, improved remittances, tighter monetary policy, and increased confidence in FX market reforms. Now, the gains have helped stabilize the naira relative to recent volatility and improve the dollar liquidity in offshore markets. However, economists caution that the short-term FX improvements do not automatically translate into real sector relief, because that's the question here. We're seeing these gains. Okay, so now dollars 1,385 naira to a dollar. What does that mean? How long will the effect of that change? Will the person who goes to buy a good today at that price, will it reflect on the pricing of his goods tomorrow? Or because, I bought the dollar the next day at 1.4. So what does this mean actually, for the average Nigerian and the long run? What does this actually mean, this Forex gain? So yes, as they said, it doesn't automatically translate into real sector relief, especially when structural constraints like power shortages continue to raise production costs. So yes, we've got this relief. I've gone maybe to the market today with my dollar, gone to import some goods to help with production, but energy costs, power cost is not going to allow that. You will see these gains in FX translate to gains in cost of living. So these things equally work hand in hand. So the key question will remain, and that is whether these Forex gains are durable and productive, or merely cyclical improvements vulnerable to external shocks. Now, one of the reasons why we're having these gains, really, if you understand, it's because of what's happening on the global front. The dollar is actually weakened, really, in the global front due to certain statements and comments by President Donald Trump and other issues that are happening as well on the global business scene. Now, away from these two topics, something else that came up just on Wednesday, Benin Republic had its meeting of some sort. Is commerce had a thing in Lagos, and it seems like they're trying to woo Nigerian manufacturers to come over to Benin and do business, and they're saying they have tax breaks. The story goes that Benin Republic is actively cutting Nigerian manufacturers with tax breaks, simplified regulations, and cheaper operating conditions. Now, for manufacturers struggling with Nigeria's higher energy costs, infrastructure gaps, and policy uncertainty, the offer could be very tempting. Now, the risk of Nigeria is clear: industrial migration, loss of jobs, and erosion of domestic manufacturing base, even as the country seeks to boost non-oil exports and industrial output. Now, let's go back to what happened a few years ago, say 2024, when companies like GSK left Nigeria and moved, I think, just to nearby Ghana here, and we saw the effect it had on a very popular medication, which of antibiotics. The price went through the roof. From something you could get about 2,000 naira to for a sachet became 19,000 naira some point in time just to get that brand of antibiotics. So these things happen. If Benin is being able to cut Nigerians and probably tempt them enough to move, we're going to see probably high cost of goods, of these goods that we're able to get at maybe a cheaper rate while the manufacturers were here in Nigeria. And if you recall in our top stories earlier, the manufacturers are saying that high energy costs, electricity tariff hikes is causing them to become innovative. Hopefully, one of those innovations is not carrying their companies and their industries over to Benin Republic, where they could get tax breaks, simplified regulations and cheaper operating conditions. Hopefully, this move by Benin Republic will get the Nigerian government to set up and get to do something as to how to not have their own indigenous companies thinking, it might be better for me to actually move over to Benin to start a company. It might be better for my business, better for my cost, better for my profit, for my bookkeeping and accounts if I were to actually move over to the Benin Republic and start up a business. Unfortunately, again, I apologize because we couldn't have our guests to give us more deep insights to what these matters could mean for us as a country and how we can move forward and do better. But that's it for us this morning on Business Daily. I've been your host, Chiamaka Nwafor. Same time, same place next week. Bye for now.